All right. Welcome back to the channel, everyone out there. This is Future Trading with Mike. I appreciate you tuning in today. Let's talk about day trading setup, okay? I took an entry this morning going short, all right, off the direction or following in the direction of how the market was trending or moving, right? So the market's been moving to the downside, making lower lows and lower highs, right? But I am a supply and demand style trader. So what I'm looking for is what I classify more so as my bread and butter technique or strategy, the way that I actually trade using supply and demand. I'm going to show you what I was looking for this morning that allowed this trade setup to actually unfold for me and allowed me to take the trade. You know, it pretty much gave me the green light to say, hey, take that trade. Now, I do not use any indicators, okay? I trade primarily just following price action, you know, reading the market, following, looking at the structure of the market, that's market structure. And if you can do that, market structure coupled with price action, basically trading from a naked chart, I highly recommend you doing that, especially if you're someone that's starting out. Don't allow yourself to get inundated or cluttered-minded with a bunch of indicators, all right? I have the volume profile. Volume is important to me, but if you've been following this channel long enough, you know that I only strictly use the volume profile for what? To basically give me or let me know where there is areas of volume, because price likes to trade around areas of volume. But if I'm looking to go go long, I'm looking to what? Buy the lows, sell the highs. So if price is at the lower portion of a high volume area, I'm looking to buy. At the upper portion of a high volume area, I'm looking to sell. But I don't allow that to give me like the pure indication of, you know, or a signal to go short or go long, okay? It's simply all driven around supply and demand and following price action. Let's talk about it, okay? Now, looking at things and how they unfolded here, okay? We see what the market moving to the downside, all right? Pay close attention because, again, this is a day trading setup that to me is near and dear to my heart. It's my bread and butter technique in a sense of what, you know, just following the flow of the market, okay? All right, so let's take a look at this. Market running to the downside, right? Okay, so what happens? It makes a low. Now, this is the low from yesterday's what? Trading session, okay? Then it turns back around. We have resistance right here, okay? Price starts to make these higher highs and higher lows, okay? Now, we all know the market likes to do what? It does this ebbs and flow type thing, right? Where it's going to push up, pull back, push up, pull back, or push lower, pull back, push lower, pull back. You know, those type things, you know? Higher highs, higher lows, lower highs, you know, kind of shifting around. All right. So the market is making this move to the upside. It takes out resistance right here, right? And what's it doing? It's forming a base, a foundation, if you want to think of it like that, an established footwork or groundwork area to where it's building a base, okay? So it's making higher highs, higher lows. It takes out resistance right here, okay, as it's moving to the upside. So basically what I'm looking to happen here is for price to take out some area of resistance, all right? So basically making a low, all right? Because when I'm looking to for a setup, I'm looking for either an area of supply or demand to trade off of, okay? Now in this particular setup right here, I notice price taking out this area of resistance, forming a base here, okay? Which is, you know, an area where the market is basically ranging as it's moving to the upside, all right? So it's making these higher highs and higher lows, takes out resistance, boom, it makes a new high, okay? Because at the breaking resistance here, you see, breaks up, pulls back, makes a new high, okay? So we got price breaking structure to the upside, okay? Now, what does it do then, all right? We have to think about what is the overall direction of the market in a sense, though, okay? The market has been moving to the downside, as you can see, right? Take a look. Moving to the downside, okay? All right? So, and we'll get to these little arrows right here. Anybody that uses NinjaTrader, you know that this is my point of entry and exit. And my last contract I had resting right here, I pretty much closed the trade out a little bit earlier, not allowing the last contract to fill. But I entered with 2 contracts, okay? But let's go ahead and talk about this. Go back and talk about the setup. Kind of getting a little tongue twisted, guys, because I'm getting a little excited here, okay? But what I'm trying to say is that price takes out resistance, moves to the upside, forming this range right here, what I call a base, right? So it makes a high right here, but you got to understand and know what is the overall direction of the market. It is moving to the downside. So primarily, this is just a pullback, a decent retracement. price setting itself up just to push lower, right? Okay. Now we know price can shift or turn around and reverse at any given time, right? Anywhere it wants to, pretty much, you know. But take a look. It makes a high here after taking out this area of resistance and breaking, you know, moving to the upside here. Makes you know, pushes up a high here, a higher low, and then a new high here. Okay, breaking structure to the upside, forming this range here. Okay, but what it does then, okay, pay close attention to this. Okay, I'm looking for the price to now to see if it, once it's made this high here, I want to take my trade in the direction with the market. So I'm not just jumping in this trade right here. I'm waiting to see if price is going to come back down, okay? Being that we have the direction of the market to the downside, okay? So I want to see if price is going to push lower after retracing pretty deep here, okay? Or have a decent retracement. It's going to push lower and take out this range here. All this area, what I call, which is basically liquidity right here, okay? And it does. It moves lower, okay? And it swipes liquidity right here. Look at it. This was the low from yesterday. It swipes liquidity right here, okay? When it does that and it starts breaking through this area, breaking through this range here, taking out this area here, all right? This area, what I call range, you know, kind of the market's ranging or a base. There was liquidity resting here as price was building up to make a move to the upside. So like I said, I want to see if price is going to take out this area here and possibly sweep the low right here. And it does. It comes down, takes out this area right here of liquidity, swipes the low here, liquidity resting there as well, okay? So I'm going to go ahead and mark. My next thing is to mark my area of supply, okay? Now, price could have came right here, rejected, and then pushed lower. But you primarily want to get into the move. In this case here, where supply rest is at, where it actually started at, okay? Where it really started at. Meaning, where did the move start? Where it started flushing to the downside, breaking through this range and taking out liquidity at the bottom. Right here. Back at the top, right here, where it made this high at and printed this high at. So, what do we see happen? Price comes down, flushes this area out, then it starts to make a high, higher lows, and starts etching its way back up to the upside. We mark our zone right here because this is supply. We wait patiently for price to get back to that area, and when price gets back to that area, we look to go short, right? Now, I got in my short a little earlier than planned, okay? I was waiting for price to tap into this area right here. I got into it right here prior to price really, you know, moving back into the area. So let's see. You know, that's a few, some, you know, took on a little heat right there is what I'm trying to say, okay? But I knew price was going to run to the downside. Why did I know that, or how did I know that? It's because the fact is that I saw price taking out this range right here, okay, this area, and breaking through this area, swiping liquidity at the bottom here, okay? So I knew if it came back and tapped back into this area of supply, that it was going to run back to the downside more than likely, at least testing this area right here and breaking through the low, okay? So, taking this area here at the bottom. Now, the thing about it is when price got back up to here, we were like 1 or 2 ticks away from tapping into the zone. Now, this was at 8 o'clock this morning, 8:10 this morning. I could have taken my trade right there, you know, but primarily I like to see price tap 100% into the zone, okay? Meaning really tap into it, all right? I don't want to really see it close into it, but really like push up a candle wick out in that area where the case is, not closing into the zone and then, you know, taking the trade going short here. Now I got into the trade a little earlier. Yes, it did come back against me some, but maybe ask, well, why didn't you got the trade? Because I know, you know, you have to know when you have years upon years of experience, okay? Yes, the market could have stopped me out. And your next question may be, where would your stop would have been? My stop would have been up here, to be honest with you, okay? Now, so a lot of people, a lot of traders don't have the capital to be able to weather that kind of storm. They maybe they're trading with a couple $1,000s or a few $100, whatever the case is. Look, then you need to trade the micros then, okay, until you can build up the right size account. You know, it depends on the trader. To me, I know I always put my stop loss at the back end, either supply or demand, okay? Because I know that they're going to probably, in most instances, test those areas, okay? So, but if you're more conservative, then put it on the back entry, at the back end where, say for instance, price taps into the zone. Once you get the candle break here, put it right here if you're very conservative, okay? Now, there is a possibility price may run back to the upside and test this area of supply up here, okay? All right, it may come up here and hit it right here in this area here, a tick or two away from stopping you out. That's why I say give yourself some breathing room. If you're more conservative, then give it some breathing room by, you know, several ticks above the point of, you know, if your entry's right here at the break of a candle, say for instance, all right, then put your stop loss at the back up here, the last candle In this case here, we've been this red candle here because we have a wick that tapped into the zone here. Give it a few ticks above that. Price may come back up there and test that area, okay? As you see here, what do? They push down, they pull back, they came aiming for this area again, okay? So that's why I always safely put my stop loss at the back here. Yes, if it does come back to that area, yeah, I'm going to take a loss, okay? Seriously, you know? But the thing about it is that I personally do not allow the trade to start coming back, you know, coming back. You know, if I see it come back to this area up here where it's getting up here, then I'm getting out, okay? All right? But in most instances, this is more of an aggressive trade for me because I saw the setup. I looked at it, what happened right here. I said, okay, price is one to two ticks away. At this point right here, I should have got on right here. But, hey, you know, I took the trade very aggressive and didn't wait for the full tap back into the zone right here, okay? Which it did. It eventually did. I just entered the trade too early, okay? And that happens from time to time. But you have to know where to put your stop loss at. Like I said, you have to have enough reserve capital, you know, to feel comfortable that if it stops you out, that it's not the end of, you know, your career or your professional trading, that you can get back in. If you're someone that's trading with a few $100 or just a few $1,000s, you're trying to trade the ES, okay? Because you know the ES is a monster, and the thing about it is its tick value is $12.50. So unlike the minis, excuse me, like the micros, which is $1.25, you're going to take some loss, okay? So look, I'm not really worried about that too much because I knew, and looking at what trend or what would happen here, what formed here, what the market was going to do. It was going to aim for this area here once it tapped back into supply, okay? So, but yes, I took some heat on here, and then the market folded and came back down, okay? I got out right here because it was shortly after the market opening up, and so actually I got in right before the market opened up, like at 9:15, I believe it was, maybe 9:20 or something like that, 9:15. Take it on there risky, you know, because typically I'll wait to about 20-25 minutes after the market opens up, which is 9:30 Eastern time, my time. So roughly about 9:50, 9:55, I'll start maybe kind of doing some trading. But I saw this setup right here, and I did not want to miss the opportunity, okay? Now, yes, it came back here, and then it goes in my direction, okay? All right? Was I scared? I mean, if you're a beginner trader and you do not understand what's going on here, that's the first thing. You have to understand what's going on. If you fail to be able to read market structure and understand and analyze, you know, what's going on in the market, what it's trying to do, then it's going to scare you out, and you're going to lose money that way, okay? Again, but you have to have the capital to be able to weather the storm as well, all right? But I knew what the market was going to do. If it tapped back into the zone, it was going to push lower, all right? Simple put, okay? But here it is. It taps into the zone, all right? And you may be asking, well, where's your first target area? Once it taps into a zone, and I have a setup like this right here, where it's taking out resistance, if the trend is to the downside, say for instance, it's taking out resistance back to the upside, it's formed a range here, makes a high, takes out the range, clears or swipes liquidity right here, and then I'm looking for the area to get back in and the area of supply, in this case here, okay? And if you're looking for demand, it's in reverse of this kind of setup. Once it taps into that area there, I'm looking to take price back down to at least the first area or level of liquidity, which is right here at the bottom right here. So it taps in here, okay? It moves, pulls back, and then it breaks, takes out liquidity here, and the bottom end of liquidity resting right here, okay? And as simple as that, it's just being able to read and understand what took place in this area. Most people would say the market's ranging right here. It is, definitely is. But as it's ranging, it's building areas of, creating liquidity to the upside here. And if you understand what's going on, the trends to the downside, like I said, I'm reiterating this again. Wait for the break of the range to the downside, price taking out liquidity. Wait for the pullback to supply. Once it taps into the zone, you get that structure break, not structure break, excuse me, candle break to the downside. Take your shot going short, okay? All right, and the rest is history. Simple as that. So this is like I said, this is my bread and butter type technique or setup that I like to see unfold. It doesn't matter the market. It doesn't matter if it's the ES, the NASDAQ, the Dow, you know, crude. It doesn't matter what the market is. Typically, when I see something like this set up, I know what's happening. So that's why I say to you guys each and every day in most videos is that market structure, price action. Understand it. Be able to read it. My recommendation is to anyone out there who's following and watching my channel, trade from a naked chart, okay? Do not allow yourself to get so confused with all these different indicators out here because I'm going to be honest with you. Well, they lag for one, And I'm not gonna say they're designed to cause you to lose. They're not. I just think they're kind of like a if you go to the bowling alley and you have, you know, if you're a kid and they put the bumpers out there for you, you know, so that the ball goes, it's always going to hit a pin. It's never going to go in the gutter or whatever the case is. The same thing here. Use the indicators as a means of guidance, okay? Never to basically support your trade entry in a sense to where you're using the indicator or a signal coming off an indicator to jump into a trade, okay? Just use it as guidance. Price action's king. I'll leave you with that. I appreciate everyone tuning in. If you're interested in joining our Discord community, find the link down in the description portion of the video below. We have over 900 members and we are growing by the day. That's all I have for you. If you could take the time and you're someone new to the channel, take the time. Please subscribe to the channel. Click on the red button down below. Click the bell. Turn on your notifications, all your post notifications, so you never miss one of the uploads here on the channel. And I will see you guys in the next video. Drop a like. Take care. Oh yeah, you may be asking, what did I pick up on that trade? Well, I entered with 2 contracts and I picked up like 4.5 points on that trade there. Now, like I said, I was aiming for this area here. I went ahead and got out because the market had opened and it started kind of doing some erratic things, pulling back here. So I went ahead and got out. You know, I went ahead and took my 4.5 points and got out. And the market did come down here where I had my last contract out and took out this area of liquidity down here at the bottom. So I picked up 4.5 points on those 2 contracts. It was a nice run. I could have picked up more, but that's okay. You know, if I allowed it to run a little bit more, I probably picked up, let's see here, 87.5. Well, yeah, I could have picked up another 4 points right there probably. Let's see, 87.5. Down to this area here. I picked up another 4 points. So I picked up like 8 points, whatever the case is. But that's part of trading, you know. You take what you get, and then you look for the next setup. Simple as that. Appreciate everyone once again tuning in, and I will see you guys in the next video. Take care.